Hey everybody, happy Wednesday. I'm Michelle Plazik with RE/MAX Realty Advantage, and this is...
I'm Kim Malden with RE/MAX Realty Advantage.
And we have a special guest today. Last week we talked about insurances, and we talked about the 4 different kinds of insurance in a sale of a home. And so this week we thought we'd get into a little bit more detail and talk about home insurance, which is a great thing to have.
Kind of have to.
If you're going to have a mortgage.
Yeah.
And so I would like to introduce Gabe to you. Gabe, why don't you go ahead and introduce yourself?
Thank you, Michelle. Thank you, Kim. My name is Gabe. I am an insurance broker here in San Antonio, Texas. I own my own franchise through Goosehead Insurance. I've been doing insurance for over 11 years here in San Antonio, and my specialty is in property and casualty in this line of business. I also do commercial business insurance for business as well, and also have my life licenses and do that as part of the insurance. And on top of that, a caveat, I heard on one of your broadcasts you were talking about the difference between a realtor and a licensed real estate agent. And I am a licensed real estate agent with an active license. I just do not practice. I use it to help my realtor friends like yourselves.
Yes,
That's terrific.
it is terrific. So one of the first things that we talked about one other time was our 10-day option period that we have here in Texas. And the very most important thing that you should do during that time is get a home inspection, but you should also call your insurance agent.
Yes.
And see if the house is insurable. Gabe, why don't you tell us a little bit about what it means to be insurable?
You and both of you are on top of that. Really good. Asking for your clients to get that inspection and the insurance during the time frame. It gives me some stories, and I'll share one here in a bit. But basically, what happens when you're within your 10-day option period, you get your insurance agent to provide you the quote, and it'll provide you the clue report. The clue report tells you what kind of losses that home has had in the past. And those are really, really important to realtors and to your clients.
So can you tell us a little more about clue reports? Because, like, what does clue stand for, first of all? If it does stand for anything, I don't know. I just know clue reports. And then what does that mean to our buyer and to the home that they're purchasing? Actually,
as far as having some sort of an idea comes, so I guess that's my own interpretation of the clue report. Having a clue as to what is on there. That's just mine. It may not be the official one, but it does certainly do give you. Yes, it works because it gives you the insights to that. And you mentioned it as how is this important to the buyer. I'll give you an example. It happened just recently. We were going through the 10-day option period, which is ending up in 2 or 3 days, and the buyer called me and asked me for a quote, and I provided that quote with the clue report, and within there was a loss for wind damage for the roof.
Right.
The inspection report was done, and there was damage to the roof. Well, apparently there was some sort of probably a miscommunication or something that did not happen, because a claim was paid out, but there was still damage on the roof. Now you can make your own assumptions, but what the buyer did is basically took that information and presented it to the realtor, and from there they backed off of the contract, which would have costed them money had they gone through the process of buying the home, and then they would have ended up owning the home and owning the problem with the roof.
Right. So I've always heard that if a house, you're shopping for a house and you find the perfect house, and your insurance agent runs a clue report and this house is burned to the ground 5 different times, then the insurance on that would be much higher, because the house itself has a history of needing insurance claims, having insurance claims. Is that correct?
That is correct to a certain point. Clue reports can affect the buyer as far as the home they are purchasing. If it's something major like a fire, like what you mentioned.
Right.
If it's something minor or some other things, it just depends what kind of insurance company you're going with. Some companies will not take the prior losses into consideration. They'll basically, sometimes they will, but if you have a good agent, they will call the underwriter and have those excused so to speak, that can happen.
Okay.
And that's what we do a lot of the times. We go in there, we talk. This is something that does not belong to the buyer, it belongs to the prior owner.
Right.
And we can get those excused, and a lot of times they won't surcharge for those items. But when it comes something like to water damage or a fire, we have to understand that the insurance company is putting their umbrella of insurance over this home. So they want to make sure that whatever was broken is fixed.
Mm-hmm.
And so they might require proof of that.
Okay.
I tell my clients to get the clue report or talk to their insurance company before we even do the inspection. Because one time I ran into a situation where we had done the inspection and then we got the clue report later, found out that there was a claim made and they had remodeled based on, I can't remember now whether it was a fire or a water damage. But we actually had to send the inspector back there to go look at the property with a different set of eyes then.
Right.
Because we knew that behind all that shine of new cabinets and whatnot, there was fire damage. Could have been fire damage behind there. So we wanted to make sure that all the electrical back behind it was all in good condition.
Very, very good situation. And for those buyers that are out there, if you are in your first day of your option period, by the first or second day, get that quote, get that clue report from your agent. Mm-hmm. Do not wait till the 8th, 9th, or 10th day. Mm-hmm. Because that way, when you have that information, like Michelle, like what you were saying, mm-hmm. it gives the inspector, gives the realtor and the inspector some more ammunition, so to speak, to go in there with a different set of eyes, mm-hmm. looking at what the inspection report should bring out.
They know what they're looking for, so it helps the inspector get their job done as well as it can be done.
Absolutely.
Yeah.
So you had mentioned roof would make a house uninsurable. Is there anything else?
Roof is probably the biggest concern when you're buying a home. In my view, because what you have to understand. Let me give you what happens when, let's say you purchase a home and it didn't get caught on the inspection report. It didn't get caught on the clue report, but there is roof damage. Well, every insurance carrier, 99.9% of them are going to do their own inspection on the home. And it's a different type of inspection than your home inspector on the real estate side. This is more of a visual. They'll take pictures. They'll look, because remember, like I said, their umbrella is protecting the home. Mm-hmm. They want to make sure the home is intact. They want to make sure that the roof is intact and it's not beyond 15 years old, which is a lot of what the insurance carriers will only accept at replacement costs. So they will go in there and do their own inspection. If it comes back that the roof needs replacing or there's been prior damage to the roof, then the buyer has a couple of options, because now they own the home. They could go back and try to get a loss settlement on the prior insurance carrier, because that's when it happened, mm-hmm. when the prior owners had it.
Well, but will the insurance that doesn't insure it anymore, will they pay?
Well, good luck trying to get that. That's a very good question, Kim. Good luck trying to get that covered. You're at the mercy of.
Usually, the insurance company you have doesn't want to pay,
well,
much less somebody else's.
And to put the I guess a little bit more stress on that, the prior owner has to pay the deductible. So after the sale is done, do you think the prior owner is going to want to go through that expense?
Right.
I don't think so. So you're at the mercy. So what happens is that you're going to either have to replace a roof, or you're going to cancel and have to find a different type of insurance that will not take the roof into what's called full replacement cost value. It could be maybe actual cash value, which is subtract any kind of damage it could have on the roof or years of wear and tear.
So I know we had a list of questions at one point. I think one of them was flood insurance. Oh, there we go. We had some questions about flood insurance. This was a good one. What does mold coverage include?
Very good question, and from one of your viewers out there. And before I go into that, I highly encourage everybody to please forward this, share this, because there's going to be a lot of interesting things that are going to be coming up. And this is a great format for new home buyers and even existing home buyers, homeowners that can have that. But mold coverage, mold coverage is not a part of your standard homeowner's policy. Just make sure you know that.
Not any mold? It's not going to cover any mold?
No, unless you have it endorsed. It's
So
not
what
going
if
to
a
cover it.
pipe breaks in your house? Like I had this happen in my house. We had a pipe that broke in our house, or we had a water leak. We had a lot of damage. There was mold under the kitchen countertops. And fortunately for us, the kitchen countertops just went away. We got new ones. But what if it had been, in the wall, and it was a result of a broken or a damaged water pipe? Would it not be covered?
Okay. Please understand that the damage to water cost is covered.
Okay.
Okay, so that you can relax. Yeah,
Okay.
yeah, you're going to have coverage on that.
It's just
Yeah.
the black mold and all
It's the black mold, exactly. See,
Gotcha.
what happened quite a few years back, 10, 15, 20 years ago, mold became such a prominent claim as far as the respiratory issues that were happening with mold. It was almost becoming a water restoration issue and mold problem where you're having to basically disinfect the whole house for any kind of mold that was in there. So because of that, the mold is not covered unless you endorse that. And you can endorse it at 25% of the home value, 50% of the home value, 75%, or 100% of the home value. Each time you do that, every gradual step increases your premium, and you do get covered for that. What a lot of times what you did in that scenario, you basically tore it out and you took care of the mold problem.
Right, that was remediated.
Right.
So what does mold coverage though actually include?
Mold coverage would be is basically any kind of coverage is for a claim is putting you back to where you were before prior to whatever damage was there.
Right.
So in this case, there would also, just like water restoration, when you have water damage, they will go in there and just dry up everything to make sure there's no water there. Mold would basically be the same thing to make sure there's no detection of mold that can cause any kind of respiratory
And then
issues.
put the house back the way it was.
Put the house back the way it was.
Mold is a very, the remediation of mold is very difficult and long and tedious.
Yes.
So I don't know what you would recommend to a typical homeowner. Probably is going to take care of any kind of mold that they see before it gets to the point where it needs remediation.
Mm-hmm.
Maybe if you were renting out your house and you are an investor and you have homes that are being used by tenants, you might want to get that coverage for sure, because you don't know if that tenant is going to take care of any mold that they find.
Right.
But when it turns into black mold and needs remediation, it costs thousands of dollars to get rid of that mold.
Yeah.
But it's the typical homeowner who uses this as their homestead is probably going to take care of it the minute they see a little something.
Absolutely.
They're going to take care of it right away before it gets to the black mold, which apparently for remediation, it needs to be like a 2-foot square black. Yeah.
Absolutely. And I can tell you from my own experience where I had some water damage in my master bedroom shower, I pretty much did that myself. Mm-hmm. And I did the big major fans on there, sprayed some bleach after tearing that part of the wall, and did the fixtures myself, and that took care of the mold. Mm-hmm. But that's my experience. If you're not able to do things yourself, a lot of times you may want to have that coverage and also be able to find somebody that can put you back to where you were before.
Yeah, absolutely. So we were talking about just now our investors and tenants. This just boggles my mind. Why is it more expensive to insure your home after you remove, let's say, your $80,000 to $100,000 worth of personal belongings and have a tenant in it when you're not insuring the belongings inside? You're only insuring the structure. Now, I know why, because I've asked this question before, but it's a common question. And so if you have a home that you want to use as a rental, your insurance is going to go up, even though you're removing all of your personal belongings that they no longer have to insure. Tell me about that, Gabe.
Sometimes it doesn't make sense, does it, Kim?
It doesn't. It's insurance. Why should it make sense?
Nothing insurance makes sense, only to I guess to the owners. No, actually, what it is when you are occupying your own home, you're going to take more or better care. This is probably the better word. Right. Better care of your home.
You're going to spray the mold when you see it.
You're going to spray the mold. You're going to notice the little things that are wrong. Yeah. When you have it rented out, A lot of times those things get overlooked until they really become something major. And so when it comes to what's called a dwelling means you do not occupy the home yourself.
Correct.
That means that normally they'll cover the home itself, the case, everything in the home. You take that home, turn it upside down, any kind of, you have to endorse that or add that on there. Sometimes you may want to add $1,000, $2,000 for appliances that you as the owner have when you're renting it out. So the dwelling is going to be a little bit more expensive than it is when you have a homeowner's policy. And that's the reason, because you're not going to take care of it. I do want to throw one thing in here is if you're out there investing on a home as a homeowner and you're renting it out to the tenants, always require that they have renter's insurance, tenant insurance, and make that a must. That they have to have that. Yes. that is my recommendation, because then comes the liability piece. The liability is a part of that as a homeowner you carry the liability if they do not have the tenant does not have that insurance that has the liability on it.
Yeah, and that's why for my investors that we've done leases for, we do require that the tenant, it's in the lease that the tenant has to have renter's insurance, and they have to provide a copy of it to the owner.
Very good. Yeah. Very good.
So one of our other good questions was replacement coverage.
Yes, that was an extremely good question. I mentioned it a little while ago as far as replacement costs on the roof, but when you have replacement costs on a home, let me explain to you what replacement cost is first and versus actual cash value, ACV. They'll put that RC versus ACV. RC stands for replacement cost. Replacement cost means that you will have the opportunity to have your home put back into the order at the full replacement value according to what it is insured. Mm-hmm. So I'm going to give you an example. $150,000 home. Okay, the home totally burns down. The replacement cost, and you have replacement costs on your home, you are going to get nothing less than $150,000 if it is determined that it is going to cost at least $150,000 to replace at the full replacement cost. Mm-hmm. Let's say you have actual cash value, ACV. They are going to subtract the years, the wear and tear, the years that you had that the home has been there. Okay, and so you may get up to 80 or 90% of the home value on that for what's called actual cash value.
Doesn't matter if you doubled your price or your value by ripping out the kitchen and bathrooms. Doesn't matter, right? You know,
you bring up a very, very good thing. A lot of homeowners out there, you're going to make some changes on your home. Your home, or all of a sudden you have your home insurance and you don't deal with your home insurance. You don't get a review. Yeah. And your home has appreciated in value in some sense, which homes in San Antonio are going up in value. Mm-hmm. When's the last time you had a review and changed your replacement cost? Because now all of a sudden your home is valued at $180,000. You bought it at $150,000. Okay. Not only that, you made some changes into your home that could have increased the value of your home.
I gotta call our insurance company.
Yes,
I haven't thought about that.
Yeah.
Michelle, if I'm making you uncomfortable about your home insurance, I'm doing my job, because I'm making you think about that. That's good. That's what it's all for.
We bought a house and insured it for what we had to insure it for.
Right.
At the time of the closing, and now we've gutted it and have put quite a bit of money into it.
Yeah.
So,
now I want to talk about that, and then I've got one more thing to mention about the replacement cost. But if you have any kind of remodeling on your home, any kind of upgrades, save your receipts, and you may want to call your insurance agent and provide them those receipts, because a lot of times, sometimes you may qualify for the discounts, especially if you had your whole air conditioning system redone, you've had your plumbing redone, you've had your electrical wiring redone, or even partially redone. You may qualify for some discounts on that. So you
we are learning a lot today.
Maybe if you got rid of a dangerous pit in your home.
Yeah, the pond.
Yeah.
Now, I did want to go over one more thing about replacement costs. Okay? Just because you have replacement costs on your home, and all of a sudden your home appreciated in value, or materials cost more to fix the home when you first purchase your insurance, it doesn't mean you're going to get anything above, let's say, for example, $150,000. Okay. you might want to consider making sure an endorsement is in there called the additional replacement costs.
Yes.
And the additional replacement costs can go 10, 15, 20, 25% above that in case there is appreciation in the materials to replace your home as far as the reconstruction is concerned.
Right.
And or if all of a sudden your home has appreciated in value and it costs more to replace it than when you first purchased it. So that's kind of like a security blanket for replacement.
Okay, so I want to make sure I understand this. So I have a $150,000 home. I have a major fire. I get the $150,000 because that's what it cost to buy the house originally. Now, the materials have gone up, but I don't get that unless I have the endorsement that's 10, 20, 25% on top of the value of my home.
You want to make sure you have that endorsement on there in case now materials that cost more
Right.
to replace that home. And we're assuming a total loss on the home
Right.
on that. Yes.
Okay, because I did not understand that previously. All
Very
right.
good. Okay. Did y'all have any questions? I do have one thing that I wanted to talk about on this one.
Yeah.
It's
Okay.
called flood insurance.
Oh, yeah,
Okay. And
it's a big one, especially since we just had Harvey.
the definition of water damage versus flood insurance, I always have to, I always like to take time to explain this.
Mhm.
Water damage is anything that happens inside the house.
Mhm.
Any kind of ruptured line, water line, plumbing, that is called water damage in the insurance terminology.
That's what I had.
Flood damage is when you have rising water coming from the outside of the home that affects several homes that rises, kind of like Houston. Houston is a perfect scenario on that. When you had rising waters that were coming up, it affected a group of homes, that's considered flood.
Does it have to affect a group of homes?
Very good question. According to the government, because government is the one that determines flood. Okay, if it affects one home, it's up to them to declare that a flood. But if it's automatically a group of homes where you have rising water, it is a flood.
Huh. Interesting. I would think that if a creek,
Overflows and
overflowed and
gets to
just
one
got
house.
to one house, that it would still be flood.
It could still be flood. It could still be flood.
But it
You
has
have-
to be
it has
determined
to
by
be
the
determined.
government. So
Has
that's
to be determined by some sort of natural disaster and such. Yeah.
Process.
Now, when we talk about flood insurance, I want to make sure we understand that flood insurance is a separate policy. It is endorsed by the government. It is the carrier that pays the claim. This is the government, the U.S. government.
Right.
So you do have to have flood. You do have to have flood insurance in order to get paid claims on flood insurance. I'm going to bring up Houston, an unfortunate situation back in August with the hurricane, and how the rains affected and how those people were affected with the natural disasters. Unless they had flood insurance, they did not qualify for, let's just say, a full fixing of their home. Now they did qualify as far as like having it paid for
right.
by the government. Now they did qualify for, because of the natural disaster, they could qualify for low interest loans, but those are loans that basically they still have to pay back.
So here's my question. So many of those people, and some of my friends included, didn't live in a flood zone. So they never would have bought flood insurance. They weren't in a flood zone. They weren't anywhere near a flood zone, a beach, a river, a bayou. But when they released some of the water from those dams, from the bayous that were overflowing, they became a flood zone. So, well, poor choice of words, they were left high and dry as far
Unfortunately.
as funds from their insurance companies.
And here is the thinking, the mind thinking that a lot of people say, I am not in a flood zone, so I don't need flood
Right.
insurance. That's because my flood zone is, let's just say, letter X. Okay,
Right.
and that means the lower
Lowest
on the
risk.
alphabet, the least likely you are as far as risk of a flood.
Mhm.
But that doesn't mean that you cannot get a flood, and that's the thing that you have to consider. If you may want to consider flood insurance, because a lot of times on a $250,000 home, it's going to run you about $450 a year. And those are rates by the government, by the way. So those are standard rates. It doesn't go against credit or anything like that. It's basically $250,000. you'll get at $450 a year. That'll give you $100,000 in contents for your personal property on that as well.
And that's if you do not live in a flood zone.
If you do not live in a flood zone, you're in a flood zone X.
But if you're in a flood zone, the
It's-
insurance
oh,
is
yeah.
quite a bit
It's
more.
quite a bit higher.
Yes, and that's when sometimes you, not sometimes, but you are required to have what's called a flood elevation certificate, Michelle. And what it is done by an engineer, where basically it tells what the level of your house is according to the flood, the water level, as far as how the flood would affect that. And that flood elevation certificate will either give you discounts, or it will give you surcharges on your flood insurance policy.
Wow. Well, we have learned a lot today.
Yeah.
We need to call our insurance men,
Y'all
our
probably
women.
do too.
And
Wow.
one thing about that is Gabe and I were talking earlier, and Gabe is a broker. So if you're looking for insurance, Gabe is someone that you can call who is going to look at all the different companies and see who has the best fit for you,
Yeah, he's going to
price-wise, shop those policies. And so give Gabe a call. Gabe, who are you with again?
My franchise is called Goosehead Insurance, and it's a wacky little name, Goosehead. Well, let me just kind of give you just a 30-second clip on that. The owner of Goosehead named it after his granddaughter, Lucy Goosey.
Oh.
So he started the company, and what we, after naming it Goosehead Insurance after his granddaughter, and what I own my franchise, basically saying I'm independent. I have over 20 different companies that I can quote on insurance with, and the numbers keep adding as we get more and more carriers that like the work that we do. We do have a full service team that supports us and supports our clients. They are all licensed. They are not lacking the license, so they are licensed, so they understand insurance. So anytime they make a recommendation or such, they are, because they are licensed on that. It's almost like when you're in real estate, if you don't have a real estate license, how can you talk about real estate?
Exactly.
Same thing as far as insurance is concerned.
And do you just mainly work in the San Antonio, Bexar County, or what's?
I am licensed in the state of Texas, so I insure any home in the state of Texas. I have homes in the Dallas areas in my under my book of business. I have homes in the Houston area in my book of business. I also work in business insurance with commercial insurance as well. That's another one of my specialties that I have a strong background in.
Okay.
And I am extremely fluent in Spanish.
Yes, I heard it. Yes, I wish. So
We're jealous.
anyway, well, you know what? This was our 20th episode, so we want to thank you all for joining us for this one. It's kind of special. Yay. And we'll be back next week.
I think we're going to talk about mortgages.
Yeah, we're talking about mortgages. So we have another special guest joining us next week. So we hope to see you all then.
Ciao.
Bye-bye.